The Central Bank of Iraq, CBI's announcement on June 2, 2025, confirming over $100 billion in reserves and more than 163 tons of gold, directly contradicts recent rumors about a financial or liquidity crisis. This development is especially significant for Iraqi Dinar (IQD) holders, both inside and outside Iraq, who have grown concerned over news of liquidity shortages, public financial strain, and delayed reforms. Below is a detailed explanation of why dinar holders should not sell their shares now, based on current indicators and economic logic. CBI confirmation: no liquidity crisis. The CBI's own statement is clear. Liquidity is fully available, whether in Iraqi dinars or US dollars, and there is no shortage in this regard. Mohammed Yunus, Director General of Investments at CBI. This means Iraq is not printing unsupported currency. There is no imminent risk of currency collapse. Both domestic, IQD, and foreign, USD, liquidity is stable, maintained through reserves. Investor note: if Iraq were truly in a fiscal or monetary collapse, the CBI would not disclose large foreign reserves and gold holdings. Their transparency here is an effort to reassure markets and investors, including dinar holders. 2. Reserves surpass $100 billion, a shield for the dinar. With over $100 billion in reserves, Iraq can easily defend its exchange rate during currency pressures. The central bank can continue to fund imports, pay for essential government spending, and support monetary reforms. The reserve acts as a backstop for a future dinar revaluation, RV, helping instill international confidence in Iraq's monetary future. This level of reserve also places Iraq above many other oil-exporting nations in per capita reserve terms, especially considering its still emerging economy. 3. Gold holdings, over 163 tons. The CBI holds 163 plus metric tons of gold, making Iraq a top-tier gold holder in the Middle East, a participant in global monetary trends of de-dollarization, and increasing reliance on real assets like gold, a hedge against USD inflation or instability, backing for the IQD during monetary tightening or exchange rate transition. Many believe Iraq may eventually peg the dinar to a gold-based or basket system instead of relying exclusively on the USD. If that happens, gold reserves will be vital for valuation and beneficial to long-term dinar holders. 4. Dinar liquidity issue is temporary, not structural. While the Ministry of Finance admitted to short-term challenges, they do not call this a financial crisis, only a liquidity management issue. The problem is mostly due to cash flow mismatch, not insolvency. The drop in oil prices reduced immediate revenues, but Iraq is maneuvering through tax reserves, treasury fund recycling, bank coordination, the long-term oil contracts and rising oil demand globally will continue to stabilize Iraq's revenues, especially with China's and India's ongoing purchases. The Ministry of Finance's recent agreement with the National Bank of Iraq to activate the Sovereign Guarantees Program has wide-ranging implications, not just for domestic economic development and banking reform, but also for how investors interpret the future of the Iraqi dinar, IQD, and potentially the Vietnamese dong, VND, in the broader context of global currency realignments and revaluations. 1. Understanding sovereign guarantees and their role in Iraq's financial system. What is a sovereign guarantee? A sovereign guarantee is a commitment by a government to repay a loan or fulfill financial obligations if the primary obligor, in this case, a bank or a borrower, defaults. When the Ministry of Finance provides this guarantee, it essentially puts the full faith and credit of the Iraqi state behind the transaction. Why now? The Iraqi economy is undergoing a pivotal shift. Iraq is trying to attract foreign investment, build infrastructure, reduce dependence on oil, strengthen the private banking sector. Sovereign guarantees lower the risk for international lenders and investors, enabling Iraqi banks to secure long-term loans from foreign institutions, local businesses to access affordable credit, large infrastructure and industrial projects to move forward. This program marks a transition from oil-funded State spending to private sector-led investment, supported by trusted financial channels. 2. Link to the Iraqi Dinar, IQD, revaluation. The Sovereign Guarantee Agreement supports the macroeconomic environment necessary for a revaluation, RV, of the Iraqi dinar, even if indirectly. Here's how. A. Strengthening the banking sector for monetary reform. The Central Bank of Iraq, CBI, has repeatedly emphasized that a modern, compliant banking sector is prerequisite to currency reform. Sovereign guarantees will enable banks to manage risk better, build relationships with international banks, create the financial infrastructure needed for future FX, liberalization and revaluation. B. Support for long-term capital projects. Large capital projects, industry, energy, housing, demand stability. By reducing financial risk for investors, Iraq increases the velocity of capital inflows. Confidence in the currency system grows. Pressure on parallel markets, black market FX, declines, narrowing the official parallel rate gap, one of the IMF's benchmarks for IQD reform. C. Enabling FX policy modernization. The CBI has been moving toward an FX regime that aligns with IMF Article 8 obligations, sovereign guarantees, stabilize expectations, allow the CBI to strengthen its reserves, create space to adjust the official exchange rate once macroeconomic stability is proven.